Analysis of the level of investments in artificial intelligence, AI, in Latin America and the Caribbean, LAC. The level of investment in artificial intelligence, AI, in Latin America and the Caribbean, LAC, is very low and concerning, with barely 1.12% of global investments, but it shows notable growth dynamism in venture investments and a strong focus on infrastructure investment by global tech giants. For example, Microsoft is investing $2.7 billion USD in AI and cloud computing infrastructure in Brazil starting in 2024 and over 3 years. The region faces a structural investment gap that restricts its potential to scale, even though AI adoption exceeds expectations. In Mexico, according to information from the company Mobile Time from 2025, AI investment grew by 42.6% in the period from 2019 to 2023, increasing from $450 million to $656 million, primarily focused on manufacturing and e-commerce. It has already been stated that LAC accounts for only 1.12% of venture capital investment in AI, according to LAC. This is only 1/6 of what would correspond to its contribution to the world economy, which is 6.6% of the global GDP. Also, according to the company's Smart Data, the cumulative private investment in LAC reached $6 billion, while the US amounted to $471 billion and China $119 billion in the period 2013 to 2024. The region lacks the computing capacity and GPU clusters necessary to train large AI models, which are almost entirely dominated by the US, 74.5%, and China, 14.1%. Epic AI 2025. This is causing an accelerated brain drain of AI specialists to markets with greater investment capital and better infrastructure. Dynamism of venture capital. Despite the low baseline, the AI venture investment market in Latin America shows a strong post-pandemic recovery and a clear focus on AI technology. According to Forbes Central America in 2024, venture investments in AI startups grew by 8%, while according to Endeavor, the growth was 26%. According to Endeavor, the amount raised by startups for AI in LAC in 2024 was $2.85 billion, while for the private investment fund LAVCA, this amount reached $4.5 billion USD. Brazil and Mexico consolidated as regional leaders, concentrating about 70% of the venture capital invested in AI in 2024 with $1.084 billion USD and $656 million respectively, according to Forbes Central America. However, if spending is considered as a percentage of GDP or per capita, Chile ranks first with $163 million equivalent to $8.31 per capita. It is followed by Brazil, $5 per capita, Mexico, $4.80, Argentina, $3, Colombia, $2.50, and Peru, $2. Mexico and Chile were the only countries that increased their AI investment between 2019 and 2023. Mexico went from $460 million to $656 million plus 42.6%, and Chile from $154 million to $163 million plus 5.8%. Brazil, on the other hand, slightly reduced its investment, minus 3.1%, as did Argentina, minus 17.6%, Colombia, minus 8.1%, and Peru, minus 12.5%. According to the Latin American Artificial Intelligence Index, ILIA 2025, which measures the level of preparation, adoption, and governance of artificial intelligence, AI, in 19 countries in the region, countries can be grouped into 3 categories based on their degree of maturity. These are pioneers, adopters, and explorers, while Chile, Brazil, and Uruguay consolidate as pioneers, with more than 60 points in the index. 8 adopting countries, including Colombia, Ecuador, Costa Rica, and the Dominican Republic, are at an intermediate level, managing to close the gap with the leaders thanks to improvements in connectivity, talent, and national strategies. Furthermore, more than a third of the countries studied remain in the explorer category, with still nascent ecosystems and limited capabilities. In summary, the adoption of artificial intelligence in the region is concentrated in a small number of countries and is primarily oriented towards the consumption of ready-to-use solutions for the end user, characterized by low technical requirements. Likewise, AI investment in Latin America is in a phase of selective maturation. Private capital flows are increasingly attracted by AI solutions that address financial inclusion and business efficiency problems, while large-scale investments from major technology groups focus on the necessary infrastructure to sustain this technological revolution. The pending challenge is to mobilize public and private capital to close the overwhelming global investment gap, which currently restricts the region's long-term potential. Nevertheless, the growing interest in this type of tool opens an opportunity to democratize innovation and strengthen productivity, since AI can generate significant benefits in economies of different scales and structures, provided they have favorable environments for innovation and entrepreneurship.